Hello, I'm John Kreitler. Welcome to the Macro Minute, the economy and the markets. In 2024, as central banks throughout the world go in different directions as it relates to interest rates for their specific domestic economies, the interplay of global currencies is fascinating and will have ramifications for not only the direction of interest rates, but also what the central banks they themselves can do as it relates to their own policy. The feedback loop is such that the global currency markets will give the cue to the central banks, not necessarily the other way around. Global currency markets are so big, so voluminous, that they themselves are the big footprint in interest rates, not necessarily the global banks. The global central banks can have the bully pulpit and talk about the direction where they want to go, and they can look to intervene, certainly with swap lines with the Federal Reserve, with corresponding central banks, but that's only at the margins. The macro trend is such that the currency markets dictate what direction things are going, and the central banks sometimes have to change their own footing, their own strategy to be in alignment with global currency pairs. If things get too stretched, the Federal Reserve does have those swap lines to help ease pressure, because strengthening a strong dollar versus a weak dollar does have ramifications. For example, a strong US dollar imports would be less expensive, therefore a dampening of inflation. However, a strong US dollar doesn't help our exporting companies because their customers in other countries are looking to buy things from us. With a strong dollar, it's going to cost them more in their currency to buy it. Therefore, earnings for those companies will suffer. There's always an interplay depending on if it's a weak or strong US dollar, and the central bank as well as the US federal government would like to have the US dollar somewhere in a range, not too strong, not too weak. In 2024, though, as everyone goes in a different direction, the European Central Bank has signaled rate cuts in June, while our Federal Reserve has talked about the second half of 2024. That change in interplay, not being on the same page but going different directions, may have us see ramifications in the global currency markets. It'll be interesting to see how 2024 plays out in interest rates, global macroeconomic themes, and all these will be reflected in global currency markets. I'm John Kreitler. This was the Macro Minute, the economy and the markets. Have a great week.